Hello everyone, welcome back to Stock Market Meridian. Today is 21st August 2026 and you're watching today's post-market report. Let's begin with today's market performance. The Indian markets opened with a slight gap up, but after that, the entire trading session remained largely sideways. There was no major directional move, and finally, the markets ended the day in a completely neutral zone. Looking at the sectoral performance, today the FMCG and chemical sectors were among the top losers. On the other hand, the metal and private bank sectors emerged as today's top gainers. Now, let's quickly move on to today's top news and important market updates. In today's pre-market report, we already discussed HDFC Bank's major overseas fundraise. And now, during today's trading session, another major private sector lender has announced a large overseas borrowing plan. ICICI Bank's board has approved overseas borrowings of up to $5 billion. The approval was given at the board meeting held on Friday, 21st August 2026. The bank can raise this money through various offshore debt instruments, including foreign currency bonds, notes, and offshore certificates of deposit. The exact timing, tranche sizes, maturities, and coupon rates will be decided later, depending on market conditions. This move comes as Indian banks are increasingly looking towards global debt markets to secure cheaper and diversified funding. One important factor here is the RBI's concessional swap window for external commercial borrowings, which remains available until the end of 2026. Just yesterday, HDFC Bank raised $1.75 billion, marking one of the largest overseas bond issuances by an Indian bank in many years. Other private lenders have also tapped global markets, including Kotak Mahindra Bank with $650 million and IDFC First Bank with $600 million. For ICICI Bank, raising overseas debt can help diversify its liability profile, support foreign currency lending, and reduce its dependence on domestic deposit growth. Next, one of the biggest talking points today was Goodluck India. The stock appeared to crash nearly 66% in a single day, opening at around 493 rupees compared with its previous close of 1439.40 rupees. But did the stock actually crash 66%? No. This was mainly because of the company's 2:1 bonus issue adjustment. Under this bonus issue, eligible shareholders receive 2 free bonus equity shares for every 1 share already held. For example, if you held 100 shares before the X date, you would receive another 200 bonus shares. That means your total holding would increase to 300 shares. So, mathematically, the theoretical X bonus price is calculated by dividing the previous price by 3. That means 1439.40 divided by 3 gives approximately 479.80. The stock opened around 493.20 rupees and traded near 471 rupees. So, on an adjusted basis, the actual decline was only around 4% and definitely not 66%. The company's dividend has also been mathematically adjusted because of the increased share count. Under the T+1 settlement cycle, the record date is 21st August 2026 and investors who held the shares before the X date were eligible for the bonus shares. The previously announced final dividend of 3 rupees per share has also been adjusted to 1 rupee per share, reflecting the tripled share base after the bonus issue. Importantly, the bonus issue itself does not change the company's market capitalization. Instead, it increases the number of shares in circulation, improves liquidity, and reduces the per share price barrier for investors. And this comes after some serious long-term compounding. The stock is up more than 33% in 2026, around 148% in 3 years, and a massive 422% over the last 5 years. Next, shares of Hindustan Aeronautics Limited or HAL gained nearly 2%, touching an intraday high of around 5,092 rupees. The reason? The Bengaluru bench of the National Company Law Tribunal or NCLT has formally ordered the dissolution of Infotech HAL Limited. Infotech HAL was a 50-50 joint venture between HAL and Cyient. The company had been dormant and non-performing for several years, with the formal liquidation process beginning back in March 2024. Now, the entity has officially reached regulatory closure. Importantly, this dissolution does not have any material impact on HAL's active operations or financials. Major manufacturing programs, including the Tejas light combat aircraft, combat helicopters, and aircraft engine manufacturing remain completely unaffected. The move essentially helps HAL clean up an inactive legacy entity, simplify corporate governance, and reduce unnecessary compliance costs. Meanwhile, HAL continues to benefit from India's growing defense procurement and defense indigenization push. Now here's an interesting development in India's food delivery market. Rapido's food delivery platform Only is rapidly gaining traction in Bengaluru. Barely 5 months after its citywide rollout, Only is now processing more than 50,000 orders every day. That's up from around 40,000 daily orders in July. And here's where it gets interesting. Bengaluru sees around 5 to 6 lakh food delivery orders every day. That means Only is already capturing roughly 10% of the city's total food delivery volume. Some restaurant chains are also seeing significant growth on the platform. For example, Empire Restaurant's daily orders on Only reportedly increased from just 136 in March to more than 1700 in July. And Rapido isn't stopping with Bengaluru. The company is reportedly preparing for a multi-city expansion across other major metropolitan markets. The core strategy is simple: lower commissions and more affordable food prices. Instead of charging restaurants heavy commissions, Only is targeting prices closer to the restaurant's offline menu price while charging customers a transparent delivery fee. Rapido believes online food delivery remains under-penetrated because many consumers avoid ordering due to inflated platform prices. And this competition is already forcing the established players to respond. Swiggy is expanding its budget-focused towing platform, Zomato is pushing affordable meals through Bistro, and Flipkart is also preparing an ONDC-powered food service. So India's food delivery market could become significantly more competitive in the coming months. Moving on to the power sector. The Supreme Court of India has agreed to urgently hear a plea filed by the Maharashtra State Electricity Distribution Company Limited or MSEDCL against an order involving nearly 600 crore rupees payable to JSW Energy. The dispute relates to whether certain central emergency power directives applied to JSW Energy's intra-state power plant. Back in December 2025, the Maharashtra Electricity Regulatory Commission or MERC directed MSEDCL to pay approximately 599 crore rupees to JSW Energy. This included around 568 crore rupees in differential energy charges and approximately 31 crore rupees in fixed charges, along with applicable late payment surcharges. MERC had ruled that the Ministry of Power's directions under Section 11 of the Electricity Act did not apply to JSW Energy's Unit 1 at Ratnagiri because it is an intra-state generating station. MSEDCL has already deposited 250 crore rupees with JSW Energy following earlier Supreme Court directions. However, the dispute has continued. On August 19, the Appellate Tribunal for Electricity, or APTEL, allowed MSEDCL to withdraw its appeal but refused to give permission to seek a review before MERC. APTEL also criticized the attempt to reopen the matter. Now, MSEDCL has approached the Supreme Court, which has agreed to urgently examine whether MERC can reconsider the original award. So this is an important legal development for JSW Energy, and investors will closely track the Supreme Court proceedings. Next, there is positive regulatory news for United Spirits. The company has successfully resolved its regulatory compliance matter with the Central Food Safety Regulator. The FSSAI issued a formal revocation order on August 20, 2026. This order officially revokes the previous directive issued on July 29th, which had temporarily halted the sale of certain identified whiskey products. With the revocation, normal commercial supply and distribution of the affected batches can resume. The earlier issue was related to labeling compliance for certain whiskey products manufactured at a third-party contract manufacturing facility in Madhya Pradesh. Importantly, the matter was limited to specific batches. United Spirits has also stated that there is no material financial or operational impact from the original order or its subsequent revocation. Its major brands, including McDowell's, Royal Challenge, Signature, and Premium Single Malts, continue their normal commercial operations. So overall, this development removes an important regulatory overhang for the company. Next, Zydus Life Sciences has secured final approval from the USFDA for its ascorbic acid injection USP. And there's an important advantage here. The product has been designated as a competitive generic therapy or CGT, giving Zydus 180 days of generic market exclusivity from the first day of commercial marketing. The product is the generic equivalent of the reference drug Ascor injection. The reference product recorded annual US sales of approximately $11.6 million according to IQVIA MAT June 2026 data. The injection is used for the short-term treatment of scurvy in adults and pediatric patients aged 5 months and older when oral intake is not possible or sufficient. The product will be manufactured at Zydus's USFDA-approved injectable facility located at Jarod near Vadodara, Gujarat. It will be marketed in the United States through Zydus Pharmaceuticals USA. With this approval, the Zydus Group now has 448 USFDA approvals from 513 cumulative ANDA filings. So this is another positive addition to Zydus's US injectable portfolio. Cipla is currently facing an important regulatory event. The US Food and Drug Administration or USFDA is conducting an on-site CGMP inspection at Cipla's Indore/Pithampur Unit 4 facility. The inspection began earlier this week and is currently in its third or fourth day. This facility is particularly important because it manufactures high-value respiratory formulations and inhalation products. The plant also plays a key role in Cipla's US respiratory portfolio and its pipeline of complex generic products. The reason investors are closely watching this inspection is because the facility has remained under an Official Action Indicated or OAI status from the USFDA for around 2 years. A successful re-inspection could potentially help Cipla move towards removing this regulatory overhang. It could also support future approvals of generic respiratory products, including important pipeline assets. Now the key thing traders will watch is the outcome of the inspection. Will it conclude with 0 observations? Or will the USFDA issue a Form 483 with observations? The final outcome could become an important trigger for Cipla stock in the coming trading sessions. Moving to infrastructure, Seagull India has received a 225 crore rupee letter of award from the Himachal Pradesh State Industrial Development Corporation. The project relates to the development of the bulk drug park at Una, Himachal Pradesh. The contract includes several important infrastructure works, including formation cutting, internal roads, stormwater drainage, a bridge, and boundary fencing. The project has an 18-month execution timeline. The order is also significant because it helps Seagull India diversify beyond its traditional expressway and highway projects into industrial infrastructure and specialized civil engineering works. The company will execute the project as an item rate contract with a performance security requirement of 3% of the contract value. Overall, the order strengthens Seagull India's order book and expands its presence into a new infrastructure segment. And finally, let's look at Bejal Projects. An associate entity of Bejal Projects, Anant Grid Projects 1 Private Limited, has received a formal letter of intent from PFC Consulting after emerging as the successful L1 bidder for the Lakadia Part A Interstate Transmission Scheme. The consortium emerged as the lowest bidder following an e-reverse auction held on August 6th and 7th, 2026. The project is designed to support the evacuation of large-scale renewable power across Gujarat. The project includes approximately 270 kilometers of 765 kV double-circuit transmission lines from Halwad to Vadodara, along with additional substation works at Halwad, Vadodara and South Olpad. Anant Grid Projects 1 is jointly owned by the National Investment and Infrastructure Fund or NIIF with a 74% stake and Bajel Projects with a 26% stake. The project is strategically important because it supports India's broader renewable energy expansion and the country's target of reaching 500 gigawatts of renewable energy capacity by 2030. For Bajel Projects, this win further strengthens its position in India's power transmission and substation EPC segment. So that's all for today's post-market report. If you found this analysis useful, make sure to like this video, share it with your fellow investors and subscribe to Stock Market Meridian. I'll be back Monday morning with another detailed pre-market report covering global markets, important developments, commodities and the key factors that could influence the Indian market before the opening bell. Until then, signing off, Jai Hind.